Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news everyone is struggling to understand how the China virus impacts will play out. China's financial markets may reopen later today, but their industry probably won't, as firms stay shuttered after the week-long Spring Festival that has been upended by the virus emergency. And that will have a huge knock-on impact to not only China's economy, but just about everywhere else. A financial market reopening may bring a sharp sell-off, although Beijing will be pulling SOE strings hard to mitigate or prevent that. However, the cost of any Beijing put will be very high. China's isolation by increasing numbers of countries is gathering momentum, and that isolation is in all sorts of ways. India has banned exports of masks and protective clothing, and China has also now reported cases of the deadly bird flu virus, also in Hubei province. But no humans are affected by that so far. Other than its full mobilisation to fight the virus, their financial authorities announced an unspecified but massive program of state support to steady the economy and help firms that will be under immediate stress. It includes a $270 billion of liquidity support for financial markets, but actually only $33 billion of that is a net extra basis. And another current indicator is generating a warning. The Baltic Dry Index is now well under 500 after being at 1500 in mid-December, and it fell even lower in some specialised markets for ore carriers. Wall Street fell sharply at the end of their Friday session as investors came to grips with both the economic fallout from the China virus and also their realisation that they have been too optimistic on the prospects of the US economy. The recent momentum shift lower isn't passing, and the China situation will only add to the speed of the decline. The S&P 500 was down a sharp 1.8% on Friday, and that's more than a 2% loss for the week. While US personal spending is holding, personal income growth is slipping. For the full year, disposable personal incomes were up 4.4% in the US, but only up 3.2% in the fourth quarter as taxes rose 5.2%. The US tax cut program is biting now for most, as the benefits all went to the wealthy. Personal saving, which had been strong earlier, turned negative in the fourth quarter, an unusual American situation. Things are also negative in the latest Chicago Purchasing Managers Survey, where sentiment in this factory heartland fell sharply. It is now at its lowest level in more than 4 years, and that benchmark 4 years ago was only a brief outlier. The current depressing trend has been building for all of 2019. Worse, it is being led by sharp drops in new orders. Boeing's woes aren't helping either. And in Australia, their government has abandoned their operating surplus target after having falsely claimed that they were already in surplus. Support for climate remediation and disaster support and the China virus fallout now means that their economy will take a significant hit. The US Treasury 10-year yield will start today at under 1.51%, and that means over the past week it has declined 19 basis points, and that's on top of the prior week's 16 basis point drop. And gold is up to $1,589 an ounce as risk perceptions rise. And this is despite data from the World Gold Council that shows for a second quarter in a row, supply far exceeded demand as both India and China turn away from the yellow metal. Speculation is now gold's game. US oil prices are still falling, down to $51.50 a barrel, and that is a $3 drop in a week. The Brent benchmark is down even more to just under $56.50 a barrel. And the Kiwi dollar fell 2.3% last week and will start this week at 64.6 US cents as the China exposed currency takes a knock. On the cross rates, we're holding at 96.6 Australian cents, and against the euro, we're much lower this week at 58.3 euro cents. The net of all these shifts reduces our trade-rated index to 69.9, and that's the first time below 70 this year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.